Merry Christmas, you filthy animals. What is good, ladies and gentlemen? So, last trading day. Well, I wouldn't say it's the last trading day. The markets will be closing roughly around, halfway through the day. So the futures markets will be closing at around 1 p.m. Eastern Standard, usually about 12:30, 1 o'clock, where it really does just switch off. What can we expect for crypto? Of course, Bitcoin's still going to be moving. But I just wanted to jump on a live stream today. Quick live stream just to wish you all a Merry Christmas. Go spend some time with your family. What's the story with the markets? I mean, we're coming towards the end of it all, guys. You know, we've got the new year coming into play. We just had the unemployment claims. Let's quickly just dive into that for a split second. That came in line with Oh, tell a lie. Got changed. It came in at 224,000. They expected 223,000, and they've just changed it to 214,000. So if this market's not cooked, then what is? Turkey? Good morning. Yes, good morning. Merry Christmas to you all. So yeah, it's been quite an eventful year to say the least, ladies and gentlemen. I will say that. It's been quite mad. The markets have been just doing their own thing. You've got a wild president throwing out tariffs. You've got this indecisiveness amongst the interest rates. Don't worry, we'll focus on the labor market, put inflation aside. And now we're focusing on inflation. Don't worry about the labor market. It's doing okay. Like the Federal Reserve doesn't know what it's going to do. We got Jerome Powell, who's on his way out. I'm gutted about that bad boy. What can I say? You know, but yeah. Let's break it all down, ladies and gentlemen. Let's make this life short and sweet so you guys can go and enjoy yourselves, be with your families, and then let's make sense of it all. Here we go. So, in front of you, NASDAQ, a little bit of volatility coming into play with the unemployment claims coming in at roughly, where is it? Here we go. So, it was 224,000. It just got changed. Now it's to 214,000. That's great, which makes sense as to why everyone is still anticipating that the rates are going to be held at 86.7%. But what is it that we got to do when it comes to this time of year? Ladies and gentlemen, this is where you go onto the highest time frames. This is the NASDAQ on the 12-month chart. Look at this. Got listed on Pancake Swap, and look, I have to keep on scrolling. NASDAQ has not stopped moving up for the last 3 years, okay? Since 2019, we've had one down year. And then, of course, the rest of it has been aggressively moving to the upside. You can't complain about the NASDAQ, ladies and gentlemen. Breaking it down on Bitcoin. What's the story? I'll tell you what the story is. BlackRock, at the time that I checked this out 27 minutes ago, it was actually an hour now. They've been selling a little bit of Bitcoin. Or getting rid of it. Why? And this is what's something interesting as well. A lot of people are like, once everyone is finished with gold, they're going to go over to Bitcoin. I hope that's the case. Because gold and silver, guys, have been moving wonderfully. Look at that. Gold, $4,484 an ounce. Clipping a high of 4,527. Going into the actual gold futures itself, clearing out 4,553. That is absolutely brilliant for gold. Quickly going over to silver. My days. Remember when one live stream I said to you all at $19 an ounce, silver, $50. Now we're at 71. My expectation is, of course, silver is going to continue with this narrative. And what you are going to see with silver is you're going to see a bit of a pullback. They're going to do the same thing that you see here. They're going to do it again, but they're going to do it at a little bit of a higher price point itself. So those of you that are trying to exploit silver, anticipate a little bit of a pullback, consolidate, and then preparing for the next move, okay? Now, what you've got to understand, guys, is the expectation of interest rates being held. We are going to get cuts in 2026, but the only reason we're getting the cuts in 2026 is because we're going to be getting people into the actual Federal Reserve that are pro-Trump, that are pro-rate cut savvy, okay? So that's what the market is effectively pricing in. Now, we do have tensions overseas and what have you, but the market is pricing in the idea that, of course, we're getting more rate cuts. But are they actually preparing for something else? Are we going into a recession? That's the question. But the labor market doesn't suggest that. Looks like the labor market's doing sweet, if I'm quite frank with you. Merry Christmas. No one will look at Bitcoin if the economy isn't good. This is a very good thing. Look, Everyone's saying that when gold starts to pull back, Bitcoin's going to pull back. But let me explain to you what the idea of Bitcoin is and what the idea of gold is. Gold has got a couple of core principles. It goes up when the interest rates get cut because the yield on the dollar is coming down. Naturally, investors won't be involving themselves in dollar against gold, because why would you get yourself involved in dollars when the yield on the dollar is lower? You're better off going over to gold. But gold is a zero yielding asset, okay? So why are they going into gold? Well, it's better to go into gold than it is to dollars, because we know by fundamentals, dollar is losing value because the rates are being cut, okay? Now, with that being said, what else sends gold's price up? Gold's price goes up because of geopolitical tensions. If there's any problems overseas or anything, investors are seeking the safety. But the aggressive nature of gold's price going up could be the underlying that in the future, we might have a little bit of a problem, and they are pricing it in now so that when gold does start to pull back, when everything looks hunky-dory, then that's when gold prepares itself for the next hedge, okay? And then gold will continue its narrative higher. I do anticipate gold's going to clear $5,000 an ounce. There is expectation of it going to around $8,000, and silver going over to around $200-300 an ounce as well. And of course, with the demand for AI and just the actual properties of gold and silver when it comes to the development of products such as data centers, graphics cards, rigs, you name it, we need them as great conductors. So there's use case for it. There's just the idea of where you are diversifying your portfolio as well. So there are a number of factors that everyone goes into gold. But then when it comes to Bitcoin, the problem with Bitcoin is the stigma attached to it. People know that Bitcoin's price can drop aggressively if someone decides to sell it. People know that Bitcoin is prone to manipulation, theft, everything that comes around with what's going on in cryptocurrency. It's sad, but it's not Bitcoin's fault, okay? It's the people that use it, all right? And when Bitcoin does come away from the idea of being too much of a risk and it's not as volatile, only then Bitcoin will be the asset that everybody turns to. Bitcoin was meant to be the hedge against inflation. Well, what's that saying? Well, inflation is sticky, but Bitcoin's not moving. Look at Bitcoin's price. Let's just break it down. This is Bitcoin, okay? This is gold, okay? This is silver. This is platinum. This is palladium. What is going on? Why isn't Bitcoin moving up? Don't give me no on-chain. It's nothing to do with that. It's the perception. That's why Euro is making a move up, getting ready to explode. Your carry is going to unwind. And of course, Bank of Japan Ueda is going to be speaking on Christmas Day. That'll be a nice Christmas present, yeah? Would you be happy with that? Tino, can you please elaborate on the timeline of a Santa rally? How does it work out afterwards? Usually what happens is companies like to bump up their positions, their balance sheets, and make it look good, okay? Maybe they want to get rid of any stock, or they want to offset any taxes or what have you. Then they're going to make lots of purchases. That could be stock buyback programs, okay? But what you've got to understand is, in my opinion, we've been capping all-time highs for quite some time, okay? And the Santa rally, I mean, how long will it be? It's today, it's over. Like, we're finishing the markets, okay? It's coming to an end. So then you've only got really the 29th, the 29th, the 30th, and the 31st, and then it's back to it, ladies and gentlemen, all right? You've got a few bank holidays coming into play. So there's not really a massive Santa rally getting ready to come into action. If anything, it's been a consolidation in preparation for the start of the new year. My expectation is that we're going to go into a very interesting move at the first quarter, okay? The main emphasis for going into next year is the returns from AI companies. They have done nothing but spend, spend, spend. Now investors are going to be looking for returns. And the first quarter is going to be the make or break for the start of the year. Why? Because if investors can't see that all of this capital expenditure that's been going into AI, if it's not going to come into fruition, then investors are going to they're not going to hesitate to pull everything back. And that means if they're not going to get the returns, then they're going to think, okay, AI is just one massive expenditure that only really the Magnificent Seven can really afford to spend because they've got the money to do so, all right? You've got to understand, the companies involving AI, are they spending the money just to gain competitive advantage on who did it first? Do they care about the returns? Or are they just looking at it from perspective as in, if we've got the tech, all right, and we're the pioneers of it and we're the first to do it, then we know later on in life or later on in the cycles or in the marketplace or later on in a few quarters, we know we're going to come out on top. But the investor is fickle. He wants his returns as and when he's expecting them. So each quarter, each earnings season, that's what they're looking for. That's the problem with Bitcoin, because Bitcoin doesn't give that consistency. And not so long ago, we were talking about the 4-year cycle. Now we're going to get rid of that and not worry about the Bitcoin and the 4-year cycle. And we're going to be focusing on the ISM cycle. All of a sudden, the ISM cycle seems to be the main thing right now. Okay. And it's interesting. It was Raul had a conversation on a podcast with Crypto Banter. He had that conversation. He says, yeah, the 4-year cycle's dead. Now we got to focus on the ISM cycle, which is related to the debt cycle. Doesn't make sense. Why are we focusing on that? Or is it because it was going up continuously? All right. And then we just pin the 4-year cycle to it. Bitcoin, the problem I'll tell you where the problem lies. It's right here. All right. Why are they merging to the debt cycle and the ISM? Because the participants that are buying and selling it have legacy mindset. That means interest rates go down, money's going to be free. Or, well, it's cheaper. Cool. Let's rotate. If money's going to get expensive, okay, we need to start rotating out of yen or euro and going into dollars. Okay? We've got one major event coming up, which is the carry trade unwind. We need to wait to see if the markets do hit an extreme, which is terms of yen, euro, and dollar, and then your carry will be unwind. Okay? Bank of Japan are going to declare what they're going to plan on doing in 2026. They tell us they're going to increase the rates even further. Then happy days. The carry is going to start to unwind. And in my opinion, it's already happening as it is. Euro getting ready for a breakout to the upside. Yen getting ready to base out at these lows to make a move to the upside. The dollar dominance itself is going to take a little bit of a tumble. Off the back of that, where is it? Here we go. Yeah, dollar's going to get ready to come down a little bit, maybe break down below the 94 region. I think if the dollar hits 92, that would be the carry unwind, in my opinion. That's what I believe will happen. That will equally lead pressure on Bitcoin to the downside because they're going to want to buy it on the cheap. There's your Bitcoin. They are buying it. Spot orders this morning, earlier on, about, 10 to 10 this morning, $52 million. Just one bar was 52 million spot purchases. They're buying it as it's coming down. So they're in a corrective phase. Everyone's selling it, getting under pressure, capitulation and what have you. But Bitcoin, your Bitcoin is still good. To us, Bitcoin is awesome. But to the bigger picture of the marketplace, just ask yourself, look, at the all-time high over here, 109, it came down. Everyone was collapsing. Oh, my God. Oh, my days. Where's my Bitcoin? And then it goes up and clears the high again. If you just mark off these ranges and look psychologically where investors react, then you can say to yourself, okay, then this looks like a spot where Bitcoin could be worth a purchase. All right? The mistake that retail makes is they think that they can align their pockets with the participants who buy Bitcoin as it drops. You've got to ask yourself the question, who on earth is buying $17 million worth of Bitcoin at 86,840? If you're buying $17 million worth of Bitcoin at 86,840, money is not a problem. It really isn't. You're just looking to exploit any movement to the upside or even to the downside if you're shorting it. But the problem we got is this. It's the ETF because they are legacy mindset. Logic says that Bitcoin should be going up. It should be going up. But because it's being deemed as a risk-on asset, it will behave like a speculative investment. And that's the problem we've got. They need Bitcoin. In my opinion, Bitcoin needs to surpass $250,000, $300,000 Bitcoin for price to be stable. That's what my expectation is. It has to hit those levels. It has to. Because then at that level, it's commitment and then it is store of value, in my honest opinion. And it's not about a cycle, 4-year cycle or not. It's about, would I rather keep my money in dollars? Would I keep it in yen? Would I keep it in euro? Or would I actually go over to Bitcoin and sit there? That's really the situation. The amount of people buying physical silver near me is nuts. Yeah, it's absolutely wild. It is absolutely wild. I think it's great that everyone's buying silver right now, because people need to sell it, Tina, is there still an opportunity for palladium and platinum? Listen, they've been rising up so significantly. And the problem we've got is because we have had so much interest coming into commodities. Commodities are consistent with investors preparing for recession. Look at the copper gold ratio, okay? When copper's going up, let me just see if I've got it up here. Copper gold, here we go. Copper gold ratio, here we go. This is important, all right? So the copper gold ratio usually tells you where you are economically speaking, okay? Oh, man, here we go. All right, so says here that the copper, all right, so the idea behind the copper gold ratio, it gives you an idea of where is the economy, okay? What do you need for construction? Copper. What do you need to build? Copper. What is everything? Everything is copper, okay? If there's no activity in copper, then it actually gives you the idea that there's no economic activity, okay? Go over to copper's price, and you can see an interesting story. It's rising. Does that mean there's economic activity? Well, GDP came in at 4.3% yesterday, so the US economy is doing fine. That means now we don't really need to cut the rates. Now we can focus on inflation. But Trump's going to get rid of Powell and make it possible that we do cut the rates. Because if the economy is doing fine, then we can cut the rates. Don't worry about inflation. Then you've got the carry. Japanese yen increasing the value of money. So it's going to be costing more money in the future. Devaluation of the dollar. It's trading negative 100, which basically means that anything below 100 is depreciation. So my dollars ain't worth anything. I'm only going to go over to an asset that's going to appreciate. Warren Buffett did say that there's going to be an interest in weaker currencies. Why? Because the reign supreme of the dollar is starting to come off. We've got another refinancing of $37 trillion worth of debt exposure. Well, it's actually $9 trillion worth of corporate debt. That's why they're banging on about getting the yields and the yields down, 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 and cutting. All right? But my belief is this, guys. Investors going into copper, investors going into silver, investors going into gold, going into palladium, to platinum, you're all looking at it from the perspective of price action. But what you've got to look at it as is the perspective of why. Forget your Fibonacci's, forget your hybrid systems, forget everything. Ask yourself why. Silver, gold, platinum is shooting up. Use case, interest rate cuts, fear, geopolitical tensions, okay? And they're pricing it all in here. That's my expectation here. Whenever commodities consolidate, okay, look at what's being said about them in the news, right? Then look at what happens when they break out, what's being said about them in the news, all right? They are the perfect representation of investors' view of things. Get everybody to buy it, sell into them, sell into them, sell into them, leave them holding the bag. All right? Gold will pull back ever so slightly, and all the people that have been buying the gold up here are going to be forced to sell, and the guys are going to come and buy it all up, and then they're going to mark it up again, and then investors are going to go and buy gold again at the all-time highs. It's brilliant. It actually is brilliant. Tina, could you explain quick the idea behind trading the volume profile and order flow? And does it trading work without leverage? Yes, it does. I mean, 2-3% without leverage is nothing. Yeah, well, what are you here to do? You're here to master the execution or make money? Because making money is the end result of the master of execution or mastering execution. So why would you focus? Don't come to trading with the thought of, I need to make money. If you do come to trading with that thought, then that means you are going to eliminate focusing on all the other aspects behind trading that you need to be aware of, okay? Before you come to look at what indicator you're going to use, do you understand the concept of the bonds market? Do you understand why this $155 trillion market cap is so important to us? Do you understand why we need to focus on the yields? What do the yields represent? Do you understand the relationship between why when the dollar is overextended against the euro being overextended? Do you understand why the euro goes up against the NASDAQ? Do you understand that? Why would the euro go up and the NASDAQ goes down? Maybe because investors are favoring European bonds or European stocks. Why does the NASDAQ go up against the euro? Okay, in some instances, because investors are favoring American stocks over European stocks or consolidating positions. Why would you need to pay attention to the idea of dollar yen? Why is that important to the idea of the dollar itself? Why would we need to focus on yen? Because it's deemed as a safe haven. Well, they're cutting their rates as well. Sorry, they're increasing their interest rates. So we know that the world's cheapest currency is now going to cost money. That's going to put you in a different position to navigate the markets in a different way. So then take all of that information, all right? What about your auctions, your bond auctions? What about understanding certain economical charts like your unemployment claims, your ISM manufacturing data as well, and linking that to the M2 money supply? Why do you need to understand all of this? Take all of that information and then add your Fibonacci's and make the assumption that maybe it could do this, maybe it could cross over a moving average, maybe it could do all of that. But fundamentally, if you don't know and understand the motivation to why money moves, why do you think an indicator is going to do it? It's not. Remember, the hybrid system is not an indicator. It isn't. It gives you a representation of who's moving what and what's their purpose, what's their desire, what's their intention. All right? That's what you've got to look at. You can use volume profiles. You can do all sorts. Maybe for Christmas, you go and become a platinum member and you go through all the sessions. In the sessions, there is a session on number 15, which is trading order flow and vectors. Okay. And that gives you the hybrid system, and it gives you everything that I'm talking about right now about using macros and everything. Does dive into a couple of other concepts where we're talking about value area highs and points of control and all of that stuff. And then you've also go back into it. Then you've got this session right here. Where is it? The trading, here we go. How to use macros to trade, basically. And the macro data itself, I break down inside of this what to expect when you're using data. For example, inflation, CPI, why would money go into dollar, euro, why everything that I talk about, this is me talking about the yields on the dollar. Why would no cuts be this scenario, that scenario? And you've got to just really understand all of that and then come to the charts and say Bitcoin up, Bitcoin down. That Bitcoin up, Bitcoin down is such a broad concept that when you really understand what's going on with money, because listen, I admit, you've heard me in my old live stream say to you, I don't care about fundamentals. I didn't need to. Why? Because rates were 0.25% on the dollar. Why would I need to care about fundamentals? The unemployment market's going down, or, if there are more people unemployed, never mind. We still got money. It's cheap. But then as we start to increase our interest rates, then we change our monetary policy. I then need to start paying attention to it because I know the market is prone to changes in monetary policy. And that's going to then determine whether an investor is going to hedge himself in gold, hedge himself in silver, start sitting in cash, start buying ETFs. Maybe he's going to start going into income-based ETFs like REITs and something, real estate investment trusts. Okay, he's going to go start buying treasury bond ETFs itself. We have to have that understanding. There is no one book that you can read that tells you all of what I tell you. It's about pulling up information. What moves the bond market? Go and find out. What makes the yields go up? What makes the yields go down? Go find out. Once you found that out, go over and understand what leads to another move on the back of that. So when the bond market goes up and the stock market goes down, it means investors seek low risk. If the bond market goes up and the stock market goes up, it means investors are at a happy medium of high risk and low risk. If the yield shoots up and the bond market goes down and the stock market goes down and you all of a sudden witness the dollar shooting up, what does that mean? Investors favor cash positions. If the ETF market is seeing inflows and inflows and inflows, yet the stock market is going down and down and down, it means investors are going into safer environments of the money markets. If they're sitting in the money markets, then it means that they are diversifying their portfolios because an ETF is made up of what? A basket of assets. Okay, so the changes and fluctuations within those asset classes is going to offset the risk and, of course, the volatility. So now that's why we're wondering why there's still $7.5 trillion worth of capital stuck in the money markets and not going into the stock market, given that the stock market is in the value at these highs of around $15 trillion. So when's it going to pull back? Now go get your Fibonacci and put that to the test, and only just your Fibonacci. Do you see what I'm trying to say? There's so much more behind it. I think the guys in cryptocurrency will do so much better at crypto if they start incorporating the logic of legacy markets thinking into cryptocurrency, given that your legacy market owns a fair amount of Bitcoin. Let's be honest now. It's all stuck in your ETF. So have a little gander over there and understand the legacy markets. And then you'll truly be able to say, you know what? If the rates aren't going to get cut, it means money's going to be cheap. It's going to be more expensive for longer periods of time. I, as a savvy crypto investor, need to rotate to go somewhere else. I ain't going to go and buy XRP as a stable coin. Anyways, never mind. That makes sense, I think. Tina, which assets should I trade if I only want to trade assets that have real ownership? So no gold, silver, future options, etc. Well, don't trade assets. Trading is not owning. Remember that. Trading is not owning. You can own a stock, all right? A share of a stock. But realistically, just buy gold and silver. That's what I always say to you all. Always. Hi, Tina. What do you expect to 26th of December when we get the $28 billion worth of expiry on Bitcoin? Close up. Does it help us, or can we see a slam down? Max pain apparently is around 96. No, 94 is the max pain level. Okay. But options expiry, again, given that it's December the 26th, it's going to be volume very light across the board. So you will get some volatility. I'd wait for the expiry, and whatever position you are in after the expiry, then you're going to have an understanding of whether you need to consolidate or get rid. Get rid of this. Happy days. May I know the vector candles is formed? Go to the Traders Reality website. If you are new, start on the homepage. Everything you need is there. Join the Discord. It's free to do. Install the indicators. That's all right there for you. And then, of course, you want to become a member and get access to the masterclass sessions. Then you become a platinum member, and then you'll get access to 27 masterclasses. I've just done a new one on when to not trade the hybrid system. Okay, so you can do that for Christmas. I'd say you're more of a quant type trader, Tino. No, I'm not. Believe it or not, I'm not. I'm not a quant type trader. I'll tell you what I am. I'm a guy that will walk into a room, look around and say, what am I dealing with here? Right? I've got nut jobs to the right. I've got nut jobs to the left. I've got these dudes in the middle. What am I working with? All right. And then I start navigating and watching. All right. Wherever the masses go, I have to follow and say, okay, if they're all going over there, then I might have to go over here because there's a reason why these guys are staying over here. All right. And I'm such a discretionary trader. I take information and I think to myself, what would the big boys be thinking? Would they do this? Would they do that? Based on my experience of how money rotates and my understanding of all of that, I'll say, okay, let me take a trade and put that to the test. The key to it, guys, is this. At what point in the chart does your macroeconomic story get activated? Remember, there's millions and millions and millions of dollars are being pushed into the marketplace at one instance. Your 1 minute candle, ladies and gentlemen, is unbelievably filled with liquidity. Look, this one candlestick right here is packed with liquidity. What's this? What is that? Yeah. Order filled. Had to take a little trade. Anyways, that one candlestick right there is filled with liquidity. Okay? Going into this, look at this. In this one candle bar, which is a 1 minute candle, right? Bid side, 720 million on futures. Spot, 89 million. Asks, 451 million. Asks on the spot, 81 million. Do you understand how much money passes in one instance? You've got to look at it and say, at that point in time, does the logic of higher interest rates or no rate cuts, unemployment claims, inflation data, bond markets, yields, and all of that stuff, does it all come into play at that point? Someone's bidding a lot of Bitcoin. They're buying a lot of Bitcoin. They're hitting the bid. It's going down. Let's go to price. Gone down. Now it's coming back up. Bids, bids, bids. Bids galore. If it's green, they're buying. If it's red, they're selling. What do you think they've been doing all morning? They've been buying it up. Logic says that we'd expect Bitcoin to start offering, to start going further up. Might go up for about 10 minutes and then come back down again. That's what you've got to look out for. So logic tells where we're going to see 78, 73 in the Bitcoin in next week. Forget prices. Forget it. Don't look at prices, all right? Look at intention, All right. You look at prices and you look at a price and you say, okay, maybe price is going to hit that point. Look at it from this perspective. When was the last time price made an aggressive move up? Okay. Without looking at price, it was around this area here. What happens? It happens to be at the 74,752. What about the last time? Well, if we go over to the last time that you spent the longest period of consolidation, which is this area here, what does logic say to you? Does logic say to you that they're going to move away aggressively from this point at 74,752 and repeat the same thing of an all-time high? Not necessarily. Does logic say that the last time they spent the most amount of time at an all-time high consolidating and accumulating, does that carry more weight than what does a little retrace right here? All right, here we go. Here's a better one for you. How about we take a Fibonacci, right? A Fibo from the lows of this range here and take it all the way up to that high. What do we have? Oh my God, the 50% line. The 50% of the Fibonacci says that in the future, if it comes back down to the midpoint, it's going to move away from that point. What you got to understand is that midpoint, it's not because of the Fibonacci. Price reacts and Fibonacci happens to be the midpoint of that range. It's a reset of the inventory, reset of the algos. They reset at the midpoint of any range, okay? Price doesn't move because of the fib. Price is moving. The fib happens to be there. We put that there, okay? Yes, market participants pay attention to the fib. I think they do not give two damns about your fibs. But quant traders, because you've got investment banks, then you've got the execution traders, you've got your hedge funds and all of that speculate. Remember, hedge funds are speculators, all right? The whole purpose is to exploit. That's why they're called hedge funds, because they need to move money around. But if investment banks say, what's the rate on the dollar, ladies and gentlemen? What's cheap? What's cheap for us, right? An investment bank will be like, well, the US government gave us a bit of a shitty auction. No one really did pick that much up on the 10-year auctions yesterday. So the US government had to offer a little bit higher. Maybe investors' expectations of the future is that they think interest rates are going to be higher for longer. Well, we don't really want to expose ourselves to that because that's naturally going to impact businesses in the future and the cost of doing business. Cool. Let's start shorting the markets. And then when they get their bulk of money, they then start selling it off and going over to a hedge fund and say, all right, what's your rates? No, we'll take that amount. We'll take 100 million off you. At what rate? At this rate. Okay, cool. So they're earning that revenue off that 100 million. Then the bank will be like, well, we know where they're going to be putting their money. So let's just build a position on the back of that. And listen, you're never going to crack it. But the one thing I will say to you all is this. Short-term day trading, right, can be exploited, all right? Because if you look at Bitcoin on the 5-minute time frame, all right, just the 5-minute, all right, and even applying the logic of Asian session sweep right there, and you've got rise, retrace, continuation to the upside, right? You got to understand a momentous move up, this wave of movement to the upside from Bitcoin, okay, that doesn't impact the macros, but the macros will impact that, okay? And that's going to motivate it to go up. Shorter movements you can predict or more so react to. That's what you've got to do. Short-term day trading is a reactionary-based exercise. You don't predict, you react. And one of the lessons that I gave in the masterclass sessions was this one right here, on when to not trade the hybrid system, okay? And this is about seeking permission to trade. And I'm not saying ask your missus, okay? I'm talking about waiting for a reaction to happen. Once you've got the reaction, you then apply the logic, all right? Because logic says that price is going to go up and down. There's your logic, all right? It's going to test the Fibonacci. It's going to test this. It's going to test that. It's going to do a vector candle, MACDs, market cipher, you name it, all right? That's your logic. Then you're waiting for a reaction. Once you've got the reaction, then you seek permission. What's the condition of the marketplace? Is the marketplace giving you the idea that your logic can be applied because there's been a reactionary set of behaviors, which will then lead you to take the decision, or should I say, give you the permission to take a trade? Before you take your next trade, ladies and gentlemen, stick a post-it note or even do this on your charts, okay? Go to this, take this and type reaction equals permission. All right. Take that, put that on there and leave it. So for every time you come to the chart, like, oh my God, Bitcoin's pumping, X is going all flipping mad. Look at these two words. Reaction equals permission. All right. Do you see a reaction? Okay, cool. Do you have the permission? What's the marketplace saying? All right. Are we getting a bit of a Santa rally? Maybe. The market's closing later on, so we're not going to get a full trading day. So why would you even bother trading? Or, of course, cryptocurrency still moves, but you get the idea. You know? Sailor's average buying price is the bottom. Okay, cool. Algos get better and better, and we gone in a few years. No, we won't. The reason, listen. Yeah, it's one of those ones. I guess so. Listen, guys, your whole goal, realistically, in trading, Tina provides price discovery for the markets like many traders. Price discovery. I provide all-time highs. There's a nice little pattern reaction. What's this guy saying? Axel, always see you say that. Crypto is dead. No, crypto isn't dead. When you come to accept that crypto is just about making money and get rid of this idea that believing in the policy, believing in the coin, that's bullshit. It really is. Believing in the coin was when it started, all right? Now, given that the coin is still around, but it's not really trading that much, you might have to ask yourself, okay, do I need to hold on to this coin? If not, next coin. At least you've got a sea of different coins where money's going to rotate. And that's what it is. 1 minute you see one altcoin pumping, next minute you see it dropping, okay? That just tells you that there's no commitment. They just want to make money, all right? What's going to draw the masses towards this one coin and send it up, okay? We'll try and ride that momentum, all right? Once you're done with it, get out. Tino, how on earth have you managed to read YouTube chat daily for this many years without losing sanity or even patience? I can see you lost your hair, but that doesn't count. Well, no, I didn't lose my hair. I decided to cut it off. I decided to clip this bad boy. But yeah, I read your comments. Your comments are absolutely brilliant. Fantastic. You know? So I have lost my shit. Straight up. There you go. Just care about your returns. That's all you need to do. Make some money. That's what matters, ladies and gentlemen. Bitcoin is going up or down. It is relatively easy. It is. It can be as easy as you want it to be. All right? Because Bitcoin goes up and it goes down. Okay? But if you get messed up when it goes up and get messed up when it goes down, then Bitcoin will still go up and down. So who's the problem? You. You risk too much money, you get burnt out. You risk a little money and you've got a conviction. If you take an entry on Bitcoin, for example, you take an entry at this point here, at a light size, all right? And Bitcoin makes a move to the upside, all right? Happy days, all right? You've got a profitable position. It's not massive, but you've got a profitable position. Pulls back. You're not too worried about that profit being eaten. You're not worried about Bitcoin dropping down from in your profits. You are looking for a reason to add. The more you can expose yourself to being in a position to add, the better your trading execution will be. It really will. Because if you use too much size at this entry point and Bitcoin goes against you, you are looking to get out. Whereas if you are adding a small position, okay, and probing your bets and you scale in small, all right, Bitcoin moves up, it then pulls back. You're not worried about your profit. You're not worried about the drawdown. It can go all the way down here and you're still not bothered about it, okay? At least you'll be able to say, I'm going to take a loss because it's changed. All right. At least I lose a couple of $100. Cool. Right. But then when you see it pull back, you're now asking yourself, well, I've got a light trade on. What if it bounces from here? General market conditions, reaction, permission, and then say to yourself, you know what? I'm going to add to it. You add to the trade. It then works majestically in your favor. Cool. Do the same thing again. It pulls back. You got a little bit of size on, but you can manage it. Then add to it, goes in your favor. Then all of a sudden, you went long at 87,365. Bitcoin shot all the way up to 89,000. You've got yourself a nice 2.5K move in Bitcoin. And then you say to yourself, you know what? I'm happy with my profit. Cool. Get out. If you can psychologically balance your reactions to your entries, because it's your entry point that's going to make you lose your mind. You use too much leverage, you're getting smacked. All right? You're using too much leverage, you're going to get blown out. There's nothing else to it. I know Rio Tinto, man. Tino, how would you place $1,000 on Bitcoin? Tino, would you place $1,000 on Bitcoin with the situation right now? Bro, it's not about just slapping $1,000. What? That's not what it's about. Just slap $1,000 on Bitcoin and hope for the best. What are you going to get with $1,000? Nothing. If you're here to make money, then just scale like gold and silver, bro. Like, that's the thing that's moving. Unless you want to just enjoy these little up and down movements, then fine, be my guest. But just to be like, yeah, just chuck $1,000 on Bitcoin, forget that. You know, don't do that. It's just, your Bitcoin would need to go to 160,000 for you to make $1,000. Tina, can you explain price discovery in markets? Fear. That's all it is. Fear is price discovery. Oh my God, it's going up, I'm missing out. That's price discovery. Yeah, precious metals have stolen the show. They run the game. Cool. What's the top in silver? No one knows the top in silver. You only know the top in silver when the sentiment changes, right? Sentiment looks like it's staying for a little while, in my opinion. But buying at these levels right now in silver and gold, it's a little bit chaotic to do so, all right? You have to buy now and anticipate that you will sell in the future. That means maybe 6 months down the line, all right? I wouldn't buy gold at these levels, okay? I'd wait for a pullback, but I wouldn't hesitate to go and buy gold, physical gold, at these levels. Okay, because that for my average price of the gold that I've purchased, it's like I'm buying at $1,700 an ounce of gold. Okay, and I'm buying silver at $19. Doesn't matter to me. For me, it's just accumulation. Those are the two assets I will always be buying without hesitation. Never. And with the expansion of interest rates, with the expansion of AI doing so well, and of course, the logic of fear in the markets, are we going to get a recession and what have you? Gold's just going to keep on going up. It really is, you know. What do you think of this Binance algo spoofing the order books on Binance perps every single day at the same time? It's nothing new, my friend. They always do it. They have to make you want to get into the market. You see a big fat order? Yeah, baby, I'm in. And then it disappears. Huh? Oh, it might come back. I'll keep my risk there. If there's someone there putting 1,001 Bitcoin at that level, they're bound to come back. Then all of a sudden you sat there, the chart's like, bro, I've been in this trade for the past 2 weeks and that order's still not appeared. Tina, how would you apply the power law to the markets? What's a power law? What would you class as good leverage? 2x, 5x, 10x, 2. But it's all down to your style of trading, in my honest opinion. No? I think that's it. Oh, ladies and gentlemen, Merry Christmas. I love you all. Take care of yourselves. Enjoy times with your family. Stay away from this nut job game for a little bit because 2026 is going to be chaotic. It really is. Chaotically fun. All right, we're going to get a new boy in the FOMC. The day we get the new dude in the FOMC, every FOMC, I will wear the Powell suit. Okay? Purple tie, white shirt, sort of darkish grayish suit. I have my bottle of water. I will cough a few times and I'll wear a pair of glasses. I miss Powell. I'll even get a wig as well. Anyways, have yourselves a wonderful Christmas. Take care of yourselves, gang. Mad love and respect. And always pay yourselves. All right? Take care of yourselves, gang. Peace. Merry Christmas. What a guy.